Good afternoon, everyone, and welcome to the Fiscal Philosophy YouTube channel. You might be wondering, if you followed the channel for a long time, where have you been the last couple weeks? Well, my old laptop started making doom noises. The fans were getting loud, much like sort of like a chainsaw or a lawnmower. And that's not a sound you want to hear from your CPU fans in your laptop. And of course, my laptop was where I do all of these videos and whatnot. So I had to buy another one. It's very expensive. And I've just been, getting things kind of calibrated and set up. I had to order, while I was at it, a new mouse, new keyboard, and I'm still waiting on a USB hub because I'm using the onboard camera right now, not my old Logitech camera. Now, maybe the onboard camera of this is actually better than the Logitech since it's a much newer laptop, newer than both the old laptops in onboard camera and, of course, the old Logitech camera. But I digress. I have been focusing mainly in my investing accounts on beating the SPY this year. 2025, is it finally my year? So far, yes, for the most part. I have maintained year-to-date performance that has been better than the SPY and the Qs. This is because I've really thought hard and long over the years I've been doing this now. I've really only been publicly sharing information about my investing strategies and ideas since 2023. And thanks to the fact I have a Discord linked in the description, and I've made friends in the YouTube journey through here and also through the live collab channel Cashflow Kings Live, which I recommend you watch every Saturday, 8 p.m. Eastern. I've gotten to meet a lot of people who are very well informed, good investors, intelligent people, get their perspectives, and take bits and pieces from their investing philosophies, and, in doing that, challenge my own preconceived notions and ideas in order to be overall a more diligent and better investor. And I feel as though the fruits of that are starting to show in the performance we've seen so far this year. I mean, 2025, by all accounts, has been a pretty bad year compared to recent years, as far as like the overall market's performance has been. Yet, for me, so far, it has been, at least for the first half, my strongest. So that's a pretty stark contrast to where we've been at in the past. And I'm going to let you clue you in on like a couple of the stocks that have been really responsible for this. A big chunk, you could say, of the performance this year is down to this company, TSS Inc. TSSI is the Tinker symbol. And I started DCAing relatively early on in the year. So I did capture quite a lot of this 75% run that they have had, which means, yes, big unrealized gains. Now, I actually did take my gains off the table. I had a couple of options out expiring in September. And since we've reached kind of a relatively high point here year to date with the share price, I figured, since those are time bound and this stock is very volatile, it could give back 20-30% of these gains just as easy as it went up. It could go down. So I felt the need, since I was at like a 227 or so percent win on those options, I decided time to just take my profits on those. Now, granted, we're only talking about like a couple thousand or so dollars, not really a huge thing. I view those kind of options deals as more or less like the cherry on top. I don't think I ever plan to go super heavy options. I think they can be a gain magnifier, but for companies I believe in, I still want my core to just be, common shares that I hold and that, go up as the performance of the business goes up, the earnings increase, etc. over time. So with TSS, we're very much in alignment with the fact that this company is in a really, really good space. They are on the verge of having an explosion in earnings. They have the capability to really expand how much they're doing for their key customer. And at this point in time, anything that is in the AI space, especially AI integration, where they're a beneficiary of CapEx spend from bigger companies, and bigger companies show no sign of slowing down on that CapEx. It's still a pretty good setup for the future here. So what I've done, I took my W on those options I owned. Have that cash now, and as well, I sold some covered calls on some of my common stock at the $25 strike on this, expiring in July. So basically, if this runs again up another leg, right, and goes astronomically high, I'm only going to capture about 20% of that. However, I pocketed, I think it was like 10 covered calls for $1.65 each. So pocketed $1,650 right on that. Plus, I've still got some upside left to capture if it runs that way. But this also kind of protects me. Like, hey, if the stock price takes a little bit of a hit in the short run, then those options expire worthless. And at least I get to keep that cash that I got from it. And hey, if the stock goes back low enough, I could use some of that cash to maybe increase my position, maybe even average down if it falls low enough. So that gives me optionality. It gives me a little bit of cash today, still have a little bit of upside I can gain if it keeps running up. So all in all, I feel like that's a win-win. And if it did execute at 25, I'd have a more than 100% gain on those common shares. So that's a pretty good gain in like 7 months or whatever it is. So I'm not too upset about that. So that's where I'm at with TSS. This company has been great for me, and I'm really glad I got in. By the way, before I move on to BTI here, I want to give credit to Andrew and Stabulo in Discord for TSSI. Probably never would have bought it if it wasn't for them. So BTI is another one of my larger holdings, and as you can see, it's done quite well this year. In addition to the solid price performance, we did have nice dividends that we've received. So this one gives me money two ways. And the dividend has been nice, where I haven't really added cash to the account that I hold it in. It's given me a little bit of walking around money to do a few little spec plays that are going relatively well. So BTI has been just a nice stalwart performer here. It's insulated me somewhat from some of the downside in some of the other names that have been a little bit more volatile and a little bit trickier this year. And it's not only played defense, but really it's gone on quite the epic little run. It's moved a lot more than it usually does. And hey, as long as they continue to drive buybacks while the stock is still relatively cheap, and keep focusing on returning value to shareholders, I'm pretty happy here. I almost wish they would go harder on the buyback, but they're committed to buybacks and dividends and deleveraging, and their cash flows are high and stable. So this is also importantly a pretty cheap company. So all those things put together lead me to like BTI. They're also not very vulnerable to recessions or tariffs. So that's another key thing with BTI. Granted, yes, I got in when they were in the 30s. So obviously I'm doing pretty well. I don't know really how much more headroom it has price-wise from here, but you could do worse here than BTI. I'm probably not adding at these prices, but it could be in the bullpen. Maybe watch list it, look for a dip. You can see here on the chart, there's been a couple dips where you could have strategically added and done quite well. So just an idea to have on your whiteboard. And I'm going to throw a bonus third stock in here. I said in the beginning I was going to do a couple, but I think Uber also has been pretty remarkable this year. It's at around $60 a share or so. Both Aria and Fabio were both saying, hey, it's pretty good here. And when I looked at what they were capable of doing with their cash flows, and when I learned a little bit more about their, I guess you could call it their pricing power with drivers and customers, and how that changes depending on economic conditions in a way that Uber can sort of adapt and do well in the good times and the bad times. And the fact, of course, that they're a middleman. They have their take, and that's it. Great business model, great brand. So I decided, hey, I'm going to get in, and it has done, again, quite well for me. Now, I do think at this level, it might be like a touch expensive. Like, I don't think I'd be excited about adding here necessarily, but give it a bit of a pullback for like a more strategic entry, and I might be tempted to nibble a little bit more. This company also owns a portion of Grab, which is another company I'm invested in. Same business model, just operates in a different region. And hey, they do what they do best. And I know that there's some stuff about it's Robotaxi, it's Waymo, and it's going to put them out of business. Again, I don't think we're seeing that reflected in the numbers. And I think we're a long ways off from anybody actually replacing Uber. Uber is just starting to come into their own. People say they don't have the technology and this and that. Listen, I literally rode a ride in an Uber Robotaxi that they were testing in my area in like 2018. Okay. So they do have some technology. But I think they shelved that to just work on, profitability. Right. So let's not sit here and say that Uber is just going to get left in the dust on all of what's coming in the future. Okay. Don't count out this team. Thank you for making it to the end. If you would like to see more frequent uploading, make sure that you support the channel with your like, your subscribe, your comment, join the Discord. It's free. I don't do this for the money. I do it because I want to have productive conversations around investing. And I find that these videos help attract those kind of people to Discord, where we're able to have those discussions. Also, if you do want to support the channel, you can become a member, or what you can do is you can go to the Cashflow Kings live channel, watch it every Saturday at 8 p.m. Eastern, become a member there, because, hey, we have StreamYard to pay for, and that ain't cheap. So take it easy, everyone. Have a wonderful day.